as I look at the American economy, the risk of inflation remains very, very remote. And the persistence of unemployment remains very real. And let me explain a little bit about unemployment, because some people look at the 5% for, less than 5% unemployment and say, isn't that really good performance? The answer is the labor market is still very weak. Evidence, the fact that wages are barely keeping up with inflation, the low labor force participation. There's a lot of disguised unemployment. If you look at those who are holding jobs part-time involuntarily, the number of people in disability, the people who discourage workers who've stopped searching for a job.
There's a pretty good case that reasonable people have made for 4, not 2. I mean, I remember, I'm old enough, I remember, late Reagan was 4% inflation. It didn't seem like a hell of a lot at the time. And that would give us a lot more leeway than we currently have.
I agree with him that if you ask historically, how did we get 2% as the number? People have looked around and say, actually, there's no theory behind the 2% number. It was a number that was picked out of the thin air. If you ask now, knowing what we know now and where our economy is today, what is a more reasonable number? I think 4% would certainly be more reasonable than 2%. Maybe it should be 5%. But there's a growing consensus. Let's try 4% and see what happens. The idea at the time was that the inflationary processes were very unstable. If you went above 2%, you went to 2.5%, next day you would be at 3% and it would be escalating. The evidence is that right now it's very hard for us to move away from deflation. Very hard to get any inflationary momentum in the economy. And that means, given that, that if we should be very comfortable with a 4% target.